Welcome to Daily Mortgage Rates Live with the Mortgage Calculator. Today we're going to go through some live mortgage rates here like we do every morning, and then we will do a deep dive into a topic, and today's topic is going to be portfolio loans. But we will wait just a few minutes to get started here to go live on all the different platforms. We are streaming live on YouTube, Facebook, Instagram, and LinkedIn. We'll give everybody a chance to jump on here before we jump into it. And in the meantime, we did put the chat there up on the screen. So please drop a comment as you tune in. I see people already dropping comments there. Good morning, Christina. Thank you for the comment. And we will get started here momentarily. Hope everybody's been having a great week so far. Happy Friday, everyone. We'll get started here in just a moment. Had some great shows this week, had some great movement yesterday. Interesting to see what it's going to look like today for the rates. So we will see shortly. All right. Good morning, everybody tuning in, dropping comments. Appreciate it. Looks like we are live on all the different platforms, so we can go ahead and get it started. What we'll do is we'll go ahead and take the chat off the screen, and then we'll get into it. Welcome, everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non-QM loans. And what we do every weekday on this show is go through live mortgage rates for conventional FHA programs, as well as our non-QM programs that we love. And then we do a deep dive into a different topic every day. Today's deep dive topic is going to be portfolio loans, or blanket loans as they're called, where we are combining multiple folios, multiple properties into one loan. So a lot of ins and outs of it, pretty tricky stuff, but our sales manager, Jose Gonzalez, with 27 years of experience as a loan officer and a realtor, has plenty of experience with these and is going to break it down for us here a little bit later. But before we do that, we're going to do what we do every morning, which is pull up our live pricing tool and go over the live mortgage rates for different programs. So Nick, let's go ahead and pull up our tool and see what the market is looking like this morning.
Alrighty, let me switch my screen and we'll get started. So as Kyle mentioned, this is our pricing tool for our mortgage professionals. This will show us the general rates and the APR, including all the fees for today, July 14th, just after 11 a.m. So all of our programs are live here. If you'd like a full breakdown of all the fees that go into the loan estimate itemized out for the APR, please get with our team. We have over 300 licensed loan officers, and we offer our primary and secondary home regular loans in 24 states that we're licensed in. And we can do our DSCR and our example later today, the portfolio blanket loans, the commercial products in 44 states. So a ton of different options there as well. For our demo today with the live pricer, we will set up a general scenario so we can compare across the programs. We'll set a loan amount of $400,000. We'll set an LTV of 80% loan, 20% down payment. We'll set a desired price of $99. That means we're going to ask the computer to find the best rate for one discount point in cost, which is the typical request. We're going to compare our loan types here. We're going to start with conforming conventional. Then we'll check out our FHA rates, which is usually the next option for most borrowers. And then we'll go into expanded guidelines, also known as non-QM, where we have over 5,000 additional loan programs that offer alternative income documentation. Not all lenders have this. That's where we love to specialize. We also offer VA and USDA. VA is only for eligible veterans and active service members. If you are, please let us know. We'd be happy to quote it, no problem. Same with USDA. That's only for eligible properties that are in a USDA rural area. If you are shopping in those areas, let us know. We'd be happy to quote it. Start today with conforming conventional as always. We'll do a purchase, 30-year fixed loan for all the demos. We'll do primary occupancy, single family home, 1 unit, state of Florida, county of Miami-Dade. And for all the demos, we use an estimated FICO score of 760 and an estimated debt to income ratio of 40. So with those settings, let's check out the rates this morning. Looks about the same as it was yesterday, but that's good because a lot of downward momentum yesterday. So 6.875 rate, 0.875 discount points at cost, and just a touch over 7 APR, 7.037. So great option here for our conventional. Again, we loved the news this week where we had some downward momentum, and hopefully that continues next week as well. Now, if our customer does not qualify for conventional for any reason, typically the next option that we want to look at, we'll set up the same scenario, is our FHA. So FHA allows a little more leniency on credit events and also a much higher debt to income ratio. But we'll keep everything exactly the same so we can compare APR apples to apples on the programs. So FHA, I believe that's about the same as it was yesterday as well. So again, that's good because a lot of downward momentum this week. 6.125 rate, one discount point in cost puts our final APR at 6.717. So in this case, if our customer qualifies for both conventional and FHA is actually a touch cheaper, even though this APR does include the extra upfront and yearly mortgage insurance required for FHA. They have changed that recently. So our customers that only qualify for FHA, great benefit, but our customers that qualify for both, definitely check it out. It might be a touch cheaper in this case. Now, if our customers can't qualify for conventional or FHA, many other lenders have to deny that customer, but that's where we love to come in and present our non-QM expanded guidelines options where we can start to use alternative income options. So we'll keep everything else exactly the same for this demo. However, we can choose a new income verification option for non-QM. So full doc is what we use for FHA and conventional. That's 2 years of tax returns, what most people are used to. So we'll choose this option typically to select one of the alternates, such as asset related, business bank statement. We have our investor programs we're going to do in a minute here for investment properties. Our personal bank statement, 12-month, most popular program by far, so that we'll use that for our demo. We also have RSU, stated income, VOE, 1099, P&L, and no income at all. So for today's demo, as we do every day, we will do the 12-month bank statement, and that's for our self-employed borrowers. So many times our self-employed borrowers with tax returns have different write-offs and may not qualify at all or may not qualify for as much income as they really want to get that dream house. So in this case, we will use a non-QM option, and instead of using tax returns, we'll simply use their last 12 bank statements to determine a debt to income ratio of 40% in this example, using their actual cash in the bank rather than their tax returns. So most self-employed borrowers will qualify with double, triple, or more income and therefore can get that home they really want. So these non-QM programs are amazing to solve problems when our borrowers get stuck. So let's check out our bank statement options. Oh, this one went down a touch, it looks like. I believe 7.375 rate for 2 discount points in cost. Always non-QM will cost a little bit more typically, but a final APR of 7.475. So the final APR, again, just a touch higher than conventional, but we get to use bank statement income. So our borrower that couldn't qualify can now qualify, and the rates are very comparable. We have a ton of different options here for non-QM. Some of these options at a little bit higher rate may allow things like credit events, like foreclosures and bankruptcies. So please get with our team. Not only can we get around the income, but we can also use some of these other programs to get around credit issues and other issues that would put us out of qualification for the conventional and FHA programs that we already went over. So tons of different options that we have here for our borrowers that need a little extra help. Now, before we go into Jose's commercial example, we want to do our standard investment property rates. We have our live rates here for our standard investment property programs. So we'll keep the same demo set up, 80 LTV, 20% down payment, and we will compare our investment property options. We'll do our conventional options, and then we'll check out our non-QM options. Remember all the government options, FHA, VA, and USDA, those are not applicable for investments. So we'll start with conforming. Everything else will stay the same as our other demos. All we've edited here is investment. So let's see what the conventional programs have added for adjustments to investment properties. So again, about the same as it was yesterday. Actually a little bit touch slower, I think. Just a touch here. 7.375 rate, 3.625 discount points of cost, and a final APR of 7.629. So a great option here for our borrowers that qualify for conventional, but unfortunately the computer cannot find a 1 discount point option. Conventional just has some limitations there, and most investors would rather save this $14,500 in this example and invest that somewhere else. So most investors ask for other quotes at higher rates. As long as the property cash flows, they usually don't mind in order to save discount points. So unfortunately, we can't really do that with conventional, but that's where we love to go with our non-QM options. Great for investors here. So for the last demo, we'll do investment property, ADLTV, set it to non-QM here, and we will be able to edit our income first. So the most popular option for an investment property under non-QM is going to be our investor DSCR option. And that's because it doesn't actually require any income or employment from the borrower. We simply use the estimated rental income from the property to determine a DSCR, debt service coverage ratio. So if the estimated rents from the property can cover the PITIA of the mortgage, aka the property cash flows on a monthly basis, that's a ratio of 1.00 or higher. We also have options for properties that don't quite cash flow, a DSCR ratio of under 1.00, where the properties don't quite make enough money every month to cover that expense. We still have options for that. For our demo, though, I always put 1.5. That's the highest we have in our system. That way we can see all the different options pop up. And finally, we must select a prepayment penalty option for non-QM investment properties. That's standard. We always choose 3-year. That's standard for these programs. There are options with 0 that will cost more money, and not all loan programs allow it. Same with 5-year. If we want to save our borrower a little money, if they're going to keep the property for a long time, we can do 5 years, but not all loan programs allow it, but it does save some money when it's available. 3 years is the standard, so that's what we'll use for our demo today. Now let's check out the DSCR rates. Awesome. Downward momentum on non-QM DSCR. We love this, guys. So 7.875, back under 8 again for 0.85 discount points and cost. And our APR finally back under 8 again here for the DSCR, which is amazing. We love this stuff, guys. 7.937 on the final APR there. So remember, conventional was 6 something, I believe, just a minute ago. So DSCR for just a touch more. Amazing. When we present this to our investors, as I say every day, most investors, about 95% of investors, comparing a conventional to a DSCR quote, will always go with the DSCR for the flexibility, and it's a very comparable option. And of course, they've saved the discount points, which they can invest in other projects. So tons of different options here. As you scroll down, some of these may have different prepayment penalties. Again, with non-QM, some of these may allow things like bankruptcies and foreclosures. And some of these under the DSCR may allow things like short-term rental income, which we've done on a few of our topics. So please get with our team. We love these DSCR loans, tons of different options, tons of flexibility, and our investors can do multiple loans at the same time. So let me go ahead and get ready for Jose's demo on our topic for today, which is portfolio or blanket loan. So this is what you might think of a typical commercial loan for a typical heavy-duty commercial investor that has multiple properties. Well, they'll have a loan on multiple properties at the same time. So a lot of misconceptions here. So I think, Jose, you might want to take a minute to just talk about it, and then let's go into some actual live quotes. So let me make it big here, and you can take it over.
Good morning, everybody. Great to be with you this morning. Thank you for joining us for Daily Rates Live with the Mortgage Calculator. Let's jump right into the biggest misconception why your novice investor may want to think they want to do a portfolio loan is that they are under the misconception that they're going to save tons of money by doing the loan because it's one loan. But what you have to realize, it's one loan on multiple properties. So the only savings you may have may be possibly on the closing fee, where you may get a discount on the closing fee from the title company. However, that may be offset by additional review fees by the investor on the loan, as they have to review 5 properties. They're going to underwrite 5 properties within one loan. They're going to fund these individual purchases in one loan because they are individual purchases per se. You're not purchasing it in one contract, so to speak. You are purchasing individual folios that are going to be grouped into one loan. That's the key. Now, there is amazing benefit to the portfolio. The biggest benefit to the portfolio loan is going to be purchasing lower value properties where you may not be able to finance those individually due to being below the minimum loan amount for your standard DSCR loan. I will state that this product we are looking at this morning is a no ratio DSCR loan, which is amazing in itself when you consider that they're not going to review the cash flow of the property and make sure that it exceeds 1.0, 1.1, whatever the minimum may be for a particular program. That in itself adds an additional layer of flexibility to this whole process. The other great benefit to the portfolio loan is that it allows you to purchase a portfolio because, in many instances, these properties are owned by one seller, and the seller needs to unload all of these properties or may want to unload all these properties at the same time and wants to sell them to one buyer, which is another requirement for the portfolio loan, is that you cannot combine individual properties from multiple sellers into one loan because you need to have one closing and one disbursement. You cannot disperse to multiple sellers in one closing, right? So, you cannot convolute what's going on here. So the main uh, point here is the properties have to be purchased from one entity and go into one entity, right? As long as you abide by that requirement, the sky's the limit here as to what you can do. Because again, we're talking no ratio DSCR. I have had instances where I've had an investor, property investor, reach out to me asking about, oh, what is our minimum loan amount? So we start talking about minimum loan amounts on DSCR, where we're talking usually it's on average $75,000. But then I probe a little deeper and I've asked the investor, okay, but what is your objective here with this inquiry on minimum loan amount? Is it that you are wanting to buy low value properties, which usually tend to have a higher DSCR? And the answer is usually yes. And then I provide the real solution that he needs. Obviously, I ask him, what is their budget? What do they have available for the purchase? And it's usually not that they have only 10 or 15 or $20,000. It's they have a good amount of money. They just want to put it in an investment that's going to yield them a higher return, aka a higher DSCR. And they know, they've done their research, that you can get a $75,000-$80,000 property that could be renting for, as you know how the rents are, $1,500, $1,600, $1,700, maybe even 18 or 2,000. When you do the math, that's going to be way above 2.0 DSCR. And usually that's a solution that we have provided to the investors. When we give them the blanket loan option, they get very excited. And usually within 5 days, 7 days, they're reaching back out to us with with the multiple contracts for 3, 4, 5, 6, 7 properties. We can do as little as 2 properties into a portfolio. But most of them want to max it out. So it's a great option to be able to purchase these properties with financing, where normally the only option they would have would be cash or hard money. Um, the lowest loan allocation per property is $50,000, and the maximum LTV is 75%. So that's usually going to put you around $68,000, $70,000 around there as a minimum purchase price, which is very attractive when you're considering that normally that would be a cash purchase only. So let me share some examples here with you So here in our example, we're going with a 5 property portfolio purchase. As I stated, remember this is a no ratio DSCR, um, and this is borrower paid loan here. So there is a fee that the borrower pays. This is not lender paid comp. So in this case here, we're looking at a 9.99% rate on our $1.2 million purchase with 25% down. This example here I'm giving you is with a 5-year prepay. Now, you can buy the prepay out at all the way down to 1 year at a cost of 0.25 points per year. So I am throwing a couple examples in a minute, but here this one is no points, no buy down with a 5-year prepay, and you're looking at 9.99. So that's pretty amazing rate. So then if we throw 1 point in there, it's 9.615.
Can you zoom in a touch,
Okay,
Jose,
sure.
like you usually do?
Yeah, let me get that. Sorry about that.
I think it's
All right, here we go. So now we're
Yes,
looking at
thank you.
9.615 for the same loan with the 5-year prepay with 1 point. So when you do buy the prepay out, all it does, like I mentioned, is increase the cost, but it does not affect the rate. So here, hold on 1 second. This one actually is supposed to say 2 points. So if you pay 2 points with the 5-year prepay, you're looking at a 9.24 rate. So it's about a 0.35% more or less decrease in the rate for each point, each loan discount that you pay. So now I'm showing you here an example with the minimum credit score. Now this is pretty exciting when you consider this is 75% LTV, no ratio DSCR, and we can go down to a 650 credit score. As you know, even for non-portfolio loans, it's tough to get 75% LTV with a 650 credit score. It's like pretty much not attainable, but we do have the option not only for regular DSCR loans, quote unquote regular loans, but for our portfolio option. So here with the 650 with 1 point and the 5-year prepay and a no ratio DSCR, here, let me put the loan amount so you can see it there. You're looking at 10.865. Now this is pretty exciting news, because the investor that comes to you with that 650 or 655 credit score has exhausted all of their options on a no ratio DSCR, much less a 5-property portfolio. Then all of a sudden they get to you and you tell them yes. They're like, wait a minute. They'll start trying to get the cobwebs out of their eyes. Is that real? Pinching themselves. Are you sure? Yes, sir. Let me send you the application right now and let's get the process going. And now here is our 650 option with 1 point. That was 11.365. So I think that this option here, I believe, was 1 point. So I think we have a mistake there. 11. That should have been an 11 on that option, not a 10, because this one is 11.365. And then refinance option, cash out refinance option. This is again 75%. We do not lower the LTV on the cash out option with this program. So keep that in mind. This is a no ratio DSCR with a cash out refi option at 75% LTV. So you will note the rate is a little bit higher here than what you saw in the purchase option, but it's still very good rate, 10.115. And now we have the same loan with 2 points buy down, 9.74. And then we're not going to make him feel left out. Actually, this is our 75% LTV 5 property. Now, here I'm showing you the option. It says 3 points there because what we did here is we got the prepay at 1 year. So I just wanted to show you what the 1 year prepay is 9.74. So this is a very good option.
So you did all the options.
Yeah,
You
actually,
popping back and forth.
yeah, no, yeah. Let's go back. Let's go back here. Sorry about that. Yeah, I had just misread this. There's not a mistake on this one. It's that the system took it out of order. That's why I got a little confused there. This is actually our cash out option. So this wasn't a mistake. The mistake was that I didn't read what the order.
So the other
that
was
I
a
in.
purchase.
Yeah, yes,
I got you.
correct. So this one here, yeah, because when I was grabbing it, it took it out of order, and I clicked on it thinking it was a purchase. But this is actually our 75. So this is actually the most exciting one because this is our 75% LTV 5 property cash out, paying 1 point with the 5 year prepay. So this is really exciting because with a 650 credit score, you're still getting 75% LTV at 11.365. And if the customer, they could buy the rate here with this product as much as they want. So here there's only 1 point, but if they wanted to pay 4 points, for example, you would have a rate around 10.2%. And this option doesn't have a limit on how many points they can pay for buy down.
True commercial option.
Yes. Huh? Yes. So then they could, for example, do that, or they could get a 1 year prepay, pay a little bit extra. We would help them out with a credit simulation to let them know what they needed to do to work on their credit. And in a year and 1 day, we could refinance them into a lower rate.
Beautiful. All right, I think we do have one question. Well, I don't know if it's really a question, but I guess we can take Joe's comment here. But yeah, you just want to touch on this, Jose, about how you spread out the properties there again?
Yeah, it's not an average. They look at a per property. So each property has to have at least a $50,000 loan allocation. Now, that doesn't mean that an exception would not be granted if you have, let's say, 4 really good properties way above, and then you have one at 47,000 or 45,000. We could put in for an exception, and usually, if it's they're going to grant it, but it is not an average where you're going to get 3 or 4 higher values and 2 or 3 lower values, come up with $53,000 and be okay. If those other 2 values could be at, let's say, $38,000 each one, that's going to be a tough one to do.
Some of our other outlets do use an average, but they have a much higher average, right? So Jose's going with the best option as far as they have the lowest target. Not average, but the lowest overall, right? And some of the better terms overall. So that is common, though, Joe, for a portfolio to use that figure, but not the one that Jose has here with the best terms that we have on there.
Something I'd like you to touch on real quick is, we talked about misconceptions, thinking that, you might save money because you're going to close a bunch of loans in one, but it actually makes it a much more complicated loan, so that's probably out the window. But also talking about carve-offs. Jose, do you want to touch on how that works?
Yeah, that's something to definitely consider. Is that what Kyle is mentioning is regarding carve-out is, can you remove one property out of the portfolio because you may want to sell it. Now, in this particular option that we're showing here, which is the most flexible one, right? This is the no ratio option going down to a 650. This one does not allow carve outs. That means that if you have 5 properties in the portfolio, you would have to sell those 5 properties together. Or if you're going to refinance those properties into individual loans, you would have to do all 5 of them and do it in a manner that the portfolio lender would receive their payoff in one shot. Because usually they're not going to give you if they don't allow carve outs, they're not going to give you partial releases on those properties. If they do allow carve out, then you could get a partial release payoff, and then they would have to rebalance the portfolio. And when they do allow the carve outs, they're usually going to ask for a payoff of 120% of the amount that's being paid off, so they could balance out the risk on that portfolio, put themselves in a little bit better position. But
So
in this
basically-
particular example, they do not allow carve outs.
Right. So you got to be careful when doing these loans because you may get somewhat stuck, right, to where this option doesn't actually allow you to sell or refinance any of the individual properties. But a lot of other options may allow you to, carve off some of them, but then pay extra in order to be able to remove that one. So if you owe $100,000 on that home, they might let you remove that home and go sell it, but you'll have to pay $120,000 on the principal, right? So definitely some plus and minuses there, right? So you got to be careful and make sure to consult with your clients and educate them on the pros and cons here of a portfolio or blanket loan. Looks like we do have another question that just jumped in. Could you elaborate on the significance of 75% LTV on the cash out refinance?
Yes, very well. Just to put it into perspective, on a no ratio DSCR product at a 650 credit score, you're not going to get 75% LTV on a cash out refi pretty much anywhere except through this option. Now, I'm not saying just through this option as a portfolio, but through this option as a DSCR. This is going to be the only conduit that's going to let you go that high of an LTV with that kind of a credit score on a no ratio DSCR, or on a 1.0 or 1.2 or 1.5 with a 650 credit score. You're not going to get 75% on a cash out. 75% is the maximum right now that we're seeing on any type of a DSCR cash out, even with an 800 credit score. That's the max. And the majority of the options are at 70%, with a few options at 75%. So it's pretty significant when you can consider that you can do this option on a portfolio loan, no ratio, with a 650 credit score, and still go to 75% loan to value.
All right, great. Well, remember, we do this show at 11 a.m. Eastern time every single weekday, where we go through the live rates so that you can see the actual markets moving. And then we do a deep dive into a different topic every day. You can visit us at themortgagecalculator.com if you'd like some more info about these programs or have any other questions. But thank you, everybody, for tuning in. Thank you, Nick. Thank you,
We got one
Jose.
more question.
You want to go over the last question?
Yeah, foreign nationals. You didn't even touch on it, Jose.
Right. Well, foreign national. Now, just in answering this question, not in relation to portfolio loan, there are no adjustments, excuse me, for foreign national investor for our DSCR loans. There's going to be an adjustment in the rate. There's different credit guidelines, but it's going to be the same minimum loan amount for a DSCR foreign national as there is for a DSCR national, which means we have options at $75,000 minimum loan amount, with the best option starting at $100,000 minimum loan amount in terms of rate.
And does foreign national work for this portfolio option?
It should work for this option.
They might have an LTV adjustment
Yes.
of 5% is typical
Yes.
on this, I believe. So Jose didn't prepare one of those quotes, but most of the options for DSCR just have some sort of adjustment, as Jose said, not to the loan amount necessarily, but to the LTV or price, whatever you want to call it.
All right. Well, thank you, everybody, for tuning in. We hope to see you on Monday at 11 a.m. Eastern for the next episode of Daily Mortgage Rates Live with the Mortgage Calculator. Everyone have a great weekend.
Thanks, everybody.
Thank you, everybody.